Okay, folks, welcome to Market Wrap for the 7th. So, a really bad day in the market really began yesterday, and everybody's going to want to blame the Fed. And okay, we'll play that game, but in reality, the weakness began yesterday, not today. So we'll scroll through what Powell had to say, but really, it doesn't matter per se. What matters is what the market expects. So there are a couple of charts here that matter. So the headline, of course. Hawkish Powell pummels stocks, oil, and gold. Yield curve collapses as terminal rates soars. All right, so my yield curve chart is not updated yet, but I'm glad to hear that the yield curve collapses. Now, this is pretty interesting here and significant. The Fed's terminal rate is soaring from 5.65 up to 5.65, up a stunning 300 basis points, 3 percentage points from July 22 expectations. For context, the market is pricing an additional 105 basis points of tightening in Fed fund rates before it is over. So what really matters to me here in the short term begins here. The market is now pricing in, the market is now priced in 75 basis points of hikes in May. I don't see how the market is priced in, maybe the bond market, not the equity market. Remember, we have a PE ratio on the S&P 500 of probably 28 and a half right now. With March odds now above 60% of a 50 basis point hike, that's pretty significant stuff. So buckle up, folks. This is not good news for the equity markets. I did not want to go shorting into the Fed narrative because half the times you find the market back to where it was right before we spoke a couple of days later. So I don't want to overreact and go shorting into headlines. I try not to do that. Now, wow. This is the weekly chart of the yield curve, folks. We blew through. This is the first. This just updated it. I'm just seeing this now. We blew through the lower band of this channel. Actually, no, I'm sorry. We're right there. So, I was just interrupted by a phone call. I forgot where I was, but I had just updated this lower band of support, and we are very close to shorting this market pretty aggressively. Bond yields. So for all the rhetoric out of the Federal Reserve or out of Jay Powell today, yields were down. And so this is what I mean by, don't listen to what they say, watch what they do. And perhaps this is what they meant by the 75 basis point rate hike is priced into the market, meaning the bond market, and that's why bonds were down. I don't know. But it looks as though we could get a further pullback here on the 10-year yield. TLT, an inside bar today, no new high, no new low. No man's land. Volume was good. The tip market busted today, really bad. They're not going to do well. If you're entertaining buying tips right now, I would not. Personally, I would not go buying tips. Way too much concern about the Federal Reserve raising rates. The dollar. This is the other reason. The dollar was very strong today. I mean, this is a huge move on volume. Let's see how we closed out the day. 30-minute will do. Very strong chart. This is a rip your face off chart. You go shorting the dollar here, trading up and into the third standard deviation Bollinger Band, or overbought RSI. You think it's a no-brainer trade? What does it do? Quick pullback rip. I've been there. I know it. Very strong chart. Massive volume into the close. So we're going higher on the dollar. The VIX closed just off of its highs. This wants to go up. That means equities are going to tumble. Let's take a peek at the quarterly view. Final month of the quarter, folks. This is our macro view of the battlefield. Very few people, at least in the retail arena, are watching these macro charts. Monthly chart's still a little bit wonky, but we are creating a compression zone here. Very tight consolidation. Monthly chart. Dow Transports, a crushing day, down 1.25% on rising down volume. Exactly what you don't want to see if you're a bull. Dow Jones Industrial Average, down 1.72%. Stokes look like they may want to roll over here. Volume is light. Can't ignore it. Volume is light. S&P 500, the daily view down around 1.5%. Support has been broken again. Watch for a rally in an effort to try to recapture 4,000 or 400 on the spiders. I think it fails. Volume, huge. I'm very surprised to see such a variance between the volume on the Dow Jones versus the S&P 500. That tells me that we probably had pretty big volume on the Qs. Daily chart. Down just shy of 1.25%. Not horrible on volume. There you go. Have we broken support? Let's extend out this lower band of support. No, we have not. We will probably be there tomorrow morning. Watch for defense of these levels. And on any counter trend rally, I'm going to be buying more August puts on the Qs. Small caps. Another hard day for the small caps, down over a percentage point. Stokes rolling over. This is what I think is going to happen with all of the equity markets or the indexes. Volume rose yet again. The banks crushed today. Down nearly a percentage point. This is a big move for the XLF on big volume. Technology down 1.75%. A probable, let's update this and document it. A probable double top, and here's your support level, which would mark the prior low. We break down below it. There are a lot of stops right below that support level. Staples. Walmart got hammered today. Staples hammered today. Looks like they want to go lower. Down just shy of a percentage point. Volume, not that bad, about average. Consumer discretionaries, daily chart. Down over 1.33%. Bearish reversal bar. Big down volume. Avoid to the long side. DBA pulled back today. Consolidating on price, nothing to do there. Energy. Powell's comments hurt commodities because of the rising U.S. dollar. Therefore, energy took a hit. Let's check out that monthly chart. That's the one we've been watching. Still holding support. Now, if we break the support level, then we would entertain a short. We're not there yet. Weekly chart of oil. We have a bearish reversal bar thus far on the week. Daily view. Do we have lower lows? Quite possibly, but the trend is still up. Big down volume. I don't know here. I'm not that convinced yet that oil is done. We are in clearly a consolidation range. Let's get rid of this one. Too noisy. Now, natural gas had an okay day. Up 2.33%, thereabouts. Volume was good. I don't want to do anything with natural gas right now. Gold, daily chart, hammered today. Down over 1.75% on big volume. So we got to avoid. Nugget, crushed today. Let's check out volatility. Now, for Nugget, volatility has been pretty cheap of late. Yeah, it's still very cheap. So they didn't even pump any juice into these options today. They're very cheap. So I'm not ready to go buying options here because I think there's more downside. But man, these options are cheap, but there's more downside here. So let's avoid. GDXJ down 5%. Wow. Big volume. Silver price, wow, down over 9%. Powell just took a wrecking ball to commodities. Silver miners down 4.33%. Gold money just went on sale. Uranium, we spoke about this one last night. No great shock that we had a continuation break. Avoid. LABU flat on the session. This is probably going to go lower. I don't like the price action here. Emerging markets, avoid. I don't care if it's with China, ex-China, avoid. Dollar rising, emerging markets go lower. Tesla. It's been a great trade. Both positions we have on here. The short side has been the way to go. I mentioned last night on Market Wrap that I expected that this rounding top would result in a break. We got it today. I'm not ready to go rolling down calls yet. I think there is more downside to be had, but I think we're at a comfortable spot where we're at with our strikes to the call side and to the put side. Now, just keep in mind, we only have naked calls for April, no puts. Now, a few names that are under some pressure. Amazon, I think this is probably going to roll over. That rally that we enjoyed for a very brief period of time is over. Thank God we didn't stay too long with the options. Airbnb, this is going to go lower. I think that Airbnb is about to get hammered. In fact, I just put an order into short Airbnb, opening position after hours. Let's see if I get hit. If I don't, I don't. I'll send out an alert if I get filled. These Stokes are failing. Remember I was talking about this the other day. It's the reason why we got long with the call options. I thought we were going to hook up, which we did. Now we're rolling over. So we know that rallies tend to fade, and we want to short Airbnb. Let's take a look at the premium here. Maybe we could sell some naked calls and take a over-the-horizon approach to this trade, meaning standoff. Nah, you can't sell these premium. It's only 2% IV percentile. Adobe is another one. Looks like we're topping out here. These charts are very similar. A lot of topping action out there in tech land. As for Walmart, now Walmart, very disappointing day due to the fact that initially we ripped up higher and then we rolled right over. And I'll show you the chart that I glimpsed at, and I entertained booking profits here. I said, you know what, let it pull back, get a higher low. And it was only minutes later that I was in the red. So long story short, book your profits quickly when you have an options position on, a long options position on. So I was right about the anticipation of a big move in Walmart. I did not expect both a big move to the upside and an even larger move to the downside. So I'm going to stick with it for now because we became so oversold intraday. I'll see if we can get a bounce tomorrow, and then I'll probably exit the Walmart trade. I don't like the chart. It's not looking good here. I don't even know what the weekly chart looks like. Not looking good. So we are going to want to not fight the trade and raise capital, take a loss, move on, find another one. And that's it, folks. Everybody have a great night. I'll talk to you tomorrow. Be well.